Good evening, friends. Welcome to the next virtual coaching class organized by Board of Studies ICAI. Today evening, we are going to discuss on paper 8, indirect taxation on final level. Today's topic for our discussion is demands and recovery under GST law. Last class, we had a interaction on what sort of assessments are there, what sort of how inspection search seizure happens in the process of this assessment process. So we have learned many aspects of the powers which are vested with the department officers. So last session was a foundation where we could understand how assessment takes place from the assessee point of view, what sort of assessments are there under GST law. From there, we have understood what is the need for an officer, to start with this inspection search activity. In the process of this inspection, how the search and seizure happens, what documents, what goods can be seized. And from there, we went on to understand what are the provisions under the GST law which attract arrest provisions, right? So that was our last discussion. Today's discussion, it is a continuation of where we stopped in the last session, called demand and recovery. This particular session, today's session, I would draw your attention from this particular angle. We will understand what all authorities are there under the GST law with the department officer. As a government officer, it is, always we work on the client side. We always look from the assessee perspective. When we do audit of an assessee, as an auditor, we will see their books of accounts, we conclude their complaints level with respect to payment of taxes, etc. Now, today's session is going to teach us and make an insight for us what are the rights or what are the ways the department officers can make a recovery of tax to be paid but not paid. As a custodian of law, as an administrative person of law, how these officers are going to make a demand and recover that particular amount from the assessee concerned. So today's discussion, I'll start with a couple of examples for you to make an understand on how this recovery process happens. Then we will understand how a notice is issued for raising a demand. We will understand what all ways the tax which has to be paid but not paid has to be recovered. Any tax to be recovered, there is something called natural principles of judicial law. So as per the natural principles of your judicial law, judicial discipline rather, we will understand how does this recovery mechanism gets started. Where issuance of a notice is my starting point. Once a notice is issued, what are the general provisions which are there in the law as a assessee? What we need to keep in mind from the officer's perspective. Also, as an officer, when he is going to recover the tax along with interest and penalty, what does the law say? What is the law has conferred as a duty on this particular officer in relation to issuance of a notice and recover of money from the assessee? Tax which is collected but not paid. This is one particular provision. Which has got a multiple exposure from the business point of view. Knowingly or unknowingly, if something goes wrong, what could be the exposure from the businessman point of view? We will understand in this particular aspect called taxes collected but not paid. Now, friends, keep in mind there is a synonym saying that ignorance of law cannot be pleaded. Now, this particular plea we cannot put across before the government offices when something goes wrong. Next aspect, we have tax wrongfully collected and paid. This is one provision under section 77. One of the interesting provision which they have brought, how the interest of the assessee can be protected. Recovery proceedings. Now, what all mechanisms the officer can go in terms of recovery of tax which is to be paid but not paid. Provisional attachment. In the process of demand and recovery, This gives a guidance, this gives a thumb rule for the department officer how the interest of the revenue can be protected. Which all cases the interest of the department has to be protected, where how a provisional attachment can be invoked. When I say provisional attachment of bank account, attachment of your fixed deposits, or recovery from your property, movable, immobile property. Now, these are the couple of avenues which are there with the department officer, which we will discuss in detail. Then, the fag end of our today's discussion on continuation and validation of certain proceedings. Continuation and validation of certain proceedings. This slide indicates, the fag end of our discussion is going to give us a knowledge when a show cause notice is issued, how that show cause notice gets finalized by way of order. In the process of attaining finality, what are the blockages in that particular process? If there is a appeal which has been filed, how does the recovery mechanism gets stopped? Assuming that if the higher authority gives a favorable order to the assessee, and that particular favorable order has been challenged by the department, what would be the recourse to the assessee? And once the matter gets settled, assuming that the matter has been settled partially in the favor of department, partially in the favor of assessee, how do we deal with those kind of provisions? This is overall for us to understand from today's learning point of view. Let me just put into my Excel couple of important aspects which are easy for you to digest this topic of today's discussion. Hope you are able to see my Excel file, friends. Now, as the name goes, demand. So what can be demanded? What can be demanded by the assessing officer? What can be demanded by a proper officer? I would use a language called proper officer. Now, income tax law, I have this assessing authority. Under GST law, we have this officer called proper officer. What could be demanded? One, they could demand tax payable but not paid. Two, taxes short paid. Three, wrong availment of input tax credit. Fourth, your ineligible refund. Now, in general, when we think of this demand provisions, the proper officer has a vision to see whether the tax has been paid. Having understood the tax payable but not paid, he will see how much tax he has to pay, how much tax the assessee, the registered person has paid. If there is any short payment of tax, recovery of that particular short payment of tax. Is there any availment of input tax credit erroneously, or ineligible input tax credit availed by the assessee, utilized by the assessee? Recovery of that particular ineligible tax. Claim of ineligible refund, or any refund which is given, which is ineligible. Now, when the assessee was granted a refund which was held subsequently to be ineligible on any of the notings by the proper officer, how that money will be demanded back by the proper officer. Finally, other procedural or compliance issues like your e-way bill, or maintenance of registers, or display of your name with a GST number, issuance of a tax invoice not as per the law, or involvement in any of the provisions which are covered under Section 132. Offences. Serious offences. my section 132, which deals with my serious offenses. So friends, these are a couple of aspects which could be demanded by my proper officer. Generally, now when we think of the tax laws, the amount which has to be recovered, cannot be straight away saying, look, Praveen, you are registered under GST law. In the month of August 2020, you have paid a tax of rupees, say 22 lakhs. I understand that you are supposed to pay 25 lakhs. There was a shortfall of 3 lakhs. So I'm taking that money from your bank account. It doesn't happen where there is a verbal communication, nor the officer can send an email saying that, Praveen, I have noticed that for the month of August 2020, you have paid a sum of rupees 3 lakhs as a short payment of tax. Kindly pay that particular tax. Now, he will not, in general, say that you have violated or you have not paid. This particular assessee, the proper officer, he tries to put forth the allegations. Now, these allegations can be by way of an audit conducted by the department officer, or could be by way of a special audit which is conducted under section 66, what we have discussed. So the allegations which are put forth could be on account of audit by the proper officer or special audit, or there could be also your the other aspects of your summary assessment or your best judgment assessment. Any of those mechanisms, the officer is going to put forth something called allegations for non-complaints. This we technically call as audit memo. Now, this particular thing, this audit memo, it is going to give a communication. Praveen, I have noticed that this is something went wrong. You have anything to provide as a documentary evidence? Please provide. If you have failed to provide within a certain period of time, I would conclude that this is admissible demand on you. So they are going to make a proposition. Now, when the proposition is made, there could be two possible ways. One, I could have accepted the contention of the officer, or I could disagree with the contention of the officer. I repeat. When there is a audit memo served, the registered person may agree, may disagree. Now, when there is an agreement with the audit observations, tax along with interest and penalty, if any, that has to be paid. If there is a disagreement with the audit observations, justification with due explanation, due supporting to be provided. Now, assuming when I agree and I have paid the tax along with interest and penalty, nothing is to be done over here. So what if I have a disagreement with the officer and I have given a justification where I have given the relevant supportings which I have to rely upon? The officer concerned, when he has examined and he has not agreed with this particular suggestions or your submissions are disagreed, then he will give a show cause notice. Means the proper officer will take into cognizance, the proper officer will take on record, Praveen, you gave this particular explanation. Say there is a transaction where tax has to be paid but not paid. When I have filed my return, I have disclosed something called exempted income. The proper officer has sent a notice saying that, Praveen, kindly give the breakup of this income, which is say exempted income. I gave a suggestion, I gave a justification. The officer is not going with my explanation. So what he will do? He issues a show cause notice. Then there is some amount of time which is given in show cause notice saying that, look, I, as a proper officer, I understand that the law is the language used or the provisions are in favor of the recovery. Those are not in supporting of your justification. So kindly give me a reason. Kindly show cause me a reason why a notice should not be issued for recovery of such tax with interest and penalty. Now, this show cause notice, whatever reply I'm going to make, if it is agree, the adjudication authority may agree, may not agree. 99.99% of the time, my show cause notice will not be, any reply to a show cause notice will not be admitted by the officer concerned. There comes my order for confirmation of allegations. So kindly keep in mind, when I have given a reply to a notice and this reply is not accepted, that particular element will be confirmed on me by way of an order. So friends, this is a regular process of my demand or recovery which happens. A demand cannot be made straight away. There will be a natural natural process of judicial principles whereby this is a regular practice which has to be carried out by the officer concerned. Let me come back to my presentation. So let us start with our this particular process of demand and recovery, whatever I have put across here. Now, my demand and recovery, if I have to understand, as I say, audit memo or para has to be issued for the observations. Once a audit memo or the paras has been issued by the proper officer, based on the response which is given by the registered person, a show cause notice will be issued. This show cause notice gets converted as a adjudication. In the process of adjudication, there will be a hearing by the adjudicating authority, and that particular adjudicating authority will issue something called order. This particular adjudication is a starting place where an order under the GST law gets confirmed. Friends, first phase, you can see here, the first phase is a place where this is a point in time where the understanding in the officer is communicated. Based on the replies, whatever I have given, if they are not agreed with my explanations, they issue something called show cause notice. As a registered person, I respond to the show cause notice, and still the officer concerned believes that no, whatever submissions I have given are not acceptable, then that show cause notice gets converted as a adjudication order at this particular place. This is called adjudication order. From here, if the assessee, the registered person, is not accepting the contention, not accepting the proposition of the departmental officer, then he go for a next level called appeal. Appeal lies at a tribunal. This is my forum where the departmental representative, the assessee, goes before a bench called tribunal. This tribunal, next class, that is coming class, we are going to discuss how the bench will be constituted, who all will be there in a tribunal. If the issue does not rest over here, as a registered person, I may travel up to High Court. Even if the matter is not settled over here, I have to travel to Supreme Court. This is a chain how a departmental demand and recovery process goes along, where I, being a registered person, if I don't agree with the proposition of the departmental officer, understanding of the departmental officer. So friends, to make it clear for you, any recovery process cannot be concluded as long as assessee, the registered person, has exhausted all the mechanism of redressal available to him. As I bring to your knowledge, first step, the moment there is an audit para given, the registered person will respond to that audit para saying that I agree or I disagree. The moment there is an agreement, whatever he has agreed, he has to pay. If he says there is a disagreement, it goes to the next stage called issuance of a notice, show cause notice. This is a state where show cause notice where my officer would examine his contention of the legal provisions, examine the propositions of the registered person, and then he concludes to a adjudication order. My process where a order will be issued will be called as adjudication order. I call that AO, adjudication order. If this adjudication order is not acceptable, then it goes to the next level called tribunal. From tribunal, high court to Supreme Court. Now, sir, is it only for the assessee? Is it only for the registered person? Can this process be also be applicable for the department? Answer is yes. When a show cause notice is given, assuming the registered person puts forth his argument at the adjudication process, say the adjudicating authority has given a favorable decision in case of assessee, registered person, unfavorable decision in case of a department, then department may very well take up this matter to appeal. That is a tribunal. Assuming tribunal also gave a favorable decision in the registered person's favor, then department go to high court. Even high court gives a favorable decision to the assessee, department may travel to Supreme Court. This is the regular process of my judicial discipline. Now, one case where this is this particular cycle from department point of view, there's one High Court, Gujarat High Court decision in relation to Mohit Minerals. In that particular transaction, there was a demand raised by the department. On payment of tax on reverse charge on ocean freight. This assessee who is registered under the GST law, he said, my good officer, when I import the material at customs, I have a CAF mechanism. I have paid customs duty on my ocean freight. You are asking me to again pay a tax called tax on reverse charge, which is under your IGST law. For one transaction, twice you are collecting tax, which is unconstitutional. Now that was upheld at my High Court, and based on the High Court decision, this traveled to Supreme Court. As of now, department has gone in appeal to Supreme Court, which is there for settlement. So friends, just to give an overview, this is how my recovery, demand and recovery process gets started under my GST law. Now, let me see if there are any doubts before we go further. Let me travel to my question window. Okay. There's one question from Hari. Hari says, if a notice is given to pay self-assessment tax, but even then I have paid the tax through a challan, it says challan not available for assessment year. Should I respond to outstanding demand and send rectification saying to reprocess return? Hari, I don't know whether you have raised this question under income tax or indirect tax. No? Under indirect taxation law, when you talk about payment of taxes, when I file my return, that is GST 3B, whatever taxes payable that gets picked up from electronic credit ledger or cash ledger. Suppose if you have to pay a tax which is not to be paid through 3B, I have paid a tax, then I can use a challan called DRC3, demand recovery challan. That is the way where I can pay the taxes. And with respect to that challan, Hari, it is visible on the common portal. In the electronic cash ledger, all the amounts of tax deposited, amount of tax debited, tax credited, tax debited, everything will be available in the history, Hari. So answer to that question is we can check in the electronic credit ledger. Jitin says, can you elaborate adjudication authority who are included in it? I'll come to that particular adjudication in a while, Jitin. I'll explain you that. Now, to start with our discussion, starting with section 73. This is one particular window. A notice is issued under GST law. My section 73, the heading itself says determination of tax not paid, short paid, erroneously refunded, or input tax credit wrongly availed or utilized. Now, when you see entire GST law, there are two sections, section 73, section 74. These are the two sections which are lengthy in heading. Now, for cut short to your understanding, my section 73 says that, look, this is a mechanism where the proper officer is going to determine, what is he going to determine? Taxes not paid. He is going to determine the taxes payable but not paid. Now, how does he determine? He has to issue a notice. He also can determine short payment of tax. You are paying tax, but it has been short paid. So there could be a possibility that there is a short payment of tax. Sir, I have to pay tax at the rate of 18%, but I have paid tax at the rate of 12%. I repeat, I have to pay taxes at the rate of 18%, but I have paid the tax at the rate of 12%. Or like one classic example for this short payment of taxes is the assessee who is providing the services of renting of goods transport agency, that particular registered person, he wanted to avail the benefit of input tax credit as a GTA, if he's rendering any services, the rate of tax is 12%. When he, as a service provider, want to avail the benefit of input tax credit. So what if the service provider doesn't want to avail benefit of input tax credit? The rate of tax is 5%. Under a misconception of the law, under a wrong interpretation of the law, there is a person who is registered under GST law, under GTA category. He has been paying tax at the rate of 5%, and also that gentleman has taken the benefit of input tax credit. Like when he has purchased a motor vehicle which is meant for transportation, there is generally like a 28% plus cess another 12%, 40% is the rate of tax. Now I have been paying 40%, I have availed the benefit of input tax credit. Kindly note, 12% is the rate of tax, but this gentleman, under the wrong interpretation of the law, he has been paying 5%. Then the assessing authority may recover that short payment of tax using this provision called section 73. Erroneously refunded. Now this provision says, look, the proper officer has given a refund which was not due, which was not to be paid to the registered person per se. Having noticed that I erred or the proper officer did a mistake in processing a refund application, the same can be recovered under law by issuance of a show cause notice. Next is input tax credit wrongly availed or utilized. Input tax credit wrongly availed or utilized. Students, when you get qualified, when you get into practice, when you get into a corporate, when you have to deal with the compliances, when you deal with the departmental audit, this para number four is one para. 95% of the departmental allegations are revolving with this particular thing called input tax credit wrongly availed or utilized. There's one phrase which you have to give attention is or. Input tax credit wrongly availed or utilized. I have taken but not utilized. I have taken and utilized. Now, earlier under central excise law, the language used to be input tax credit wrongly availed and used. Under GST law, the language is used or utilized. So what is the importance and why should we give so much of attention to this particular phrase called input tax credit wrongly availed or utilized? Now, please be watchful for this. Examination. One question which is more like a case law. One question which is like a case law for 4 marks can be set from this particular phrase called input tax availed or utilized. Today's discussion read with tomorrow discussion. You will have one question for 4 marks. How the recovery process happens when there was a wrong availment of input tax credit or utilized, availed or utilized. Now, to cut short, my proper officer may invoke the provisions of section 73 for what? For any of these particular paras. Now, what is there for any reason other than now, when he is issuing a notice, He believes that there is a reason which is other than fraud, willful misstatement, or suppression of facts. Now, this is one language which I would like to draw your attention as a professional. As a professional, first aspect is fraud. Now, what do you mean by fraud? Fraud, where there's a culpable intention. There is a predetermined conceived notion, or there is a predetermined aspect of act which needs to be done to cheat or to take away from someone. That's called your fraud. Willful misstatement. Willful misstatement. So, what do you mean by willful misstatement? I have willfully prepared a statement which is incorrect. I know that this statement is incorrect, but still I have prepared that willful misstatement. Then, third is your suppression of facts. Suppression of facts. Sir, what is the difference between willful misstatement and suppression of facts? Now, willful misstatement comes where I prepare a statement, where I know that something is wrong in that statement. Example, when I prepared my input tax register, I repeat, when I prepared my input tax register, purchases during a particular month. While preparing that particular statement, my management says, look, Mr. X, an accountant, they're calling the accountant and says, look, Mr. X, this month we have a shortage of working capital. We have 50,000 rupees shortage of funds. I want my return to go at any cost. But that 50,000, I don't have money. You should manage that money. Now, what I have to do as an accountant, if the purchases are there, there was one line which was inserted. Which was actually not your purchase. Say out of 100 purchases in the month, this accountant has inserted say 1 or 2 lines with a notional invoice number, invoice date, name of the supplier, GST number of the supplier, taxable value, tax. Why? That 50,000 which was shortfall, he has made good of that 50,000 by preparing a statement. I call that as a misstatement. Third element called suppression. Now, you have not given the complete picture. You have suppressed the facts which needs to be provided. Example. I had a turnover of 10 lakhs. I have to give all the details of sales. I suppressed some information. Why? I want to reduce my output tax burden. Willingly, I have taken away data which is not there. In case of a misstatement, I insert a line which is not there. In case of suppression, I delete a line which is there. Please understand. When I have financial records, if a record is inserted forcefully, that's called misstatement. In case of suppression, in my financial data, couple of records are taken away, which is called suppression. Right? Now, what they say, my officer is trying to recover any of these 4 elements. My proper officer is recover any of these 4 elements, which is other than money. All these aspects are other than fraud, willful misstatement, suppression of facts. Now, this is what they say. Issuance of a notice under section 73. This one slide, if you understand, every discussion under this section 73 for the next 15 minutes is going to be a cakewalk for you. Let me repeat. If you understand this one slide carefully, my entire discussion for the next 15 minutes revolving with section 73, it's a cakewalk for you. So please understand. A departmental officer who is called as a proper officer. This gentleman is willing to demand something, is willing to recover something. How is going to determine that, look, you have contravened any of these 4 aspects, like tax not paid, short pay, erroneous refund, input tax wrongly availed or utilized. These are the 4 allegations. These 4 allegations, which are other than money, a reason to believe that other than fraud, willful misstatement, suppression. Now, if any of these things exist, then a notice under section 73 is going to be issued. So friends, for ease of reference, entire today's discussion, all these four elements, I refer as allegation. Whenever I say allegation, that allegation refers to non-payment of tax, short payment of tax, erroneous refund, input tax wrongly availed or utilized. These four points together, I refer to a term called allegation. This is a understanding of the officer that a registered person has to do, but not that, right? So starting point is my notice under section 73. My notice under section 73 can be issued for any of these four allegations. Now, under section 73, where it appears to the proper officer that any tax like of the four, other than the reason of fraud, willful misstatement, suppression of facts, or to evade tax, has not been paid money, he says, my proper officer, it appears to him that the tax where there is an allegation has not been paid, has been short paid, has been erroneously refunded, or you have availed input tax credit wrongly or availed or utilized wrongly, then that particular proper officer shall serve a notice on the person chargeable with tax. So the proper officer says, look, I have any of those allegations on you. If I have any of those allegations, I being a proper officer, I will serve a notice on you. On whom? On the person who is chargeable with tax. So who is the person chargeable with tax? A person who is making a supply of goods or services, he shall be the person. Or a person who is notified under reverse charge 9394. I repeat. This person in chargeable with tax could be one who is making a forward charge. Two, a person who has to pay tax on RCM basis. So my allegation, my proper officer says, look, you are a person who is supposed to pay tax on forward charge basis, or you are a person chargeable to tax under RCM. If any of these provisions you are not complied with, then let me issue a notice. Now, what he says, he shall serve a notice on the person who is chargeable with tax. For what? Chargeable with tax. A person who is chargeable with tax. For what? A tax which has not been paid. Look, he's creating a demand in the show cause notice. Look, you have to pay tax, but not paid. Look, you have to pay tax, but you have short paid your tax. Or erroneously refund was given to you. I'm creating a charge against you that you have claimed a refund which is not entitled for you, or who has wrongly availed or utilized input tax credit. Now, look at the way they have drafted their allegations. When a show cause notice is given, please read through carefully. There will be a clarity given. What are the charges created against you? Now, this point in time, I draw your attention as a professional. Whenever there is a notice, whenever there is a demand, could it be a indirect tax? Could it be a direct tax? Could it be any of the business operations under any law? The moment you receive a legal notice, please don't get panic. Examine thoroughly, read one to one, para to para, in between the lines. What is the charge created? Now, this is a starting point for your argument, for your litigation. Now, why I'm stressing so much? I'll just give you a background. The litigation and indirect taxation. There are There is very good scope for you as a professional who can pick this area as a practice, as a core area of survival. Just to give an indication, a person having expertise who is representing in a high court, that particular advocate charges not less than 75,000 per hearing. A person who represents in a Supreme Court on a taxation matters, they charge not less than 2 lakhs per hearing. A person who helps the senior advocate or the advocate, they charge not less than 25,000 per hearing. Now, there is a very good scope for us to get into this side of litigation, which gives a promising career. So, when a notice is given, they are saying that a notice is going to initiate a charge on a person for 4 elements. What does it say? Those 4 elements requires the officer, requires the person to show cause why he should not pay that amount as per the notice, along with interest and a penalty under the provisions. Now, what they say? They're saying that I'm going to create a charge. You tell me, you show cause me why you should not pay the amount, why you should not pay the amount first and foremost, along with interest under section 50. They're saying that you pay tax. Also, you pay interest under section 50 and penalty as per the provisions of the law. Third element means in my notice, the proper officer is going to create a charge against the taxable person, against that person. That person could be a registered person or he could be a taxable person. Registered person who has taken a registration. Taxable person ought to be registered but not registered, right? So my notice is issued on a person where a charge was created for any of the 4 allegations. Could be all the 4 or any of these 4 allegations. Those 4 allegations, what they say, you are supposed to pay that particular tax along with interest and along with penalty. This is my starting point of allegation, where he is going to bring all these elements into my show cause notice. Now, this particular show cause notice, what I have referred to you, so what is the time limit? So you're talking about time limit issuance of a notice. I have understood that a notice can be issued for any of those 4 items which were discussed. So can a show cause notice be issued other than any of these 4 contraventions? Answer is no. They can issue only under any of those 4 particular provisions. Now, because the assessee has contravened any of those particular 4 provisions, a show cause notice can be issued. So what is the time limit for issuance of a show cause notice? Can the proper officer issue a notice after 5 years? Can he issue a notice after 3 years? Can he issue a notice after 6 years? Reason, under GST law, they say my books of accounts should be retained for a period of 72 months under section 36. Now, what is the time limit for this gentleman to issue a show cause notice? So, my issuance of a show cause notice is linked with this aspect called annual returns due date. Please keep in mind the time limit for issuance of a notice is linked with a aspect called annual return under GST law. We have one separate session which talks about various returns under GST law. So one of the return under GST law is called annual return. Annual return, I'll just give a small introduction, detailed introduction. We will go when we start this particular topic called returns. My annual return is a return under section 35, read with section 44, where information pertaining to a particular financial year are duly reconciled and presented in a meaningful format. I repeat, all my transactions as a registered person are consolidated in a given specified format and filed for one particular financial year. That is called annual return. Under the law, 9 months from the end of the financial year, like 17-18 when I say, for financial year 17-18, on or before 31st December 2018, For financial year 1920, 9 months from 20, on or before 31st December 2020. Generally, 9 months is the time limit given. As and when the trade body requests, the government may extend the due date for filing of annual return. So friends, just keep in mind, issuance of my show cause notice is linked with this term called due date for filing annual return. So what we need to understand, first and foremost, you try to capture what is the due date, for filing the annual return. So if I know the due date for filing annual return, the provision says that within 3 years, from that due date, an order has to be served under section 73. I repeat, under GST law, they have given a time limit for 3 years. For what? For serving a order. So my order can be served within 3 years from the due date of filing of annual return. So I'll come to my Excel file to make you understand this particular provision. Say for financial year 2017-18, my due date for filing annual return is 31st December 2018. Within 3 years, like my 3 years is 19, 20, 21. My due date for annual return. My order under section 73 should be issued within 3 years, that is on or before 31st December 19, 20, 21. Right? My order under section 73 should be issued within 3 years. Now, let me go back to my presentation. Now, this section 73 says, look, you have understood due date for annual return. You have also understood order. The time limit for filing is giving an order. They say 3 months prior to the order, a show cause notice should be issued. I repeat. A show cause notice has to be served 3 months prior to the order to be served. So can I issue a show cause notice within 2 months? Can I conclude an order? Answer is no. Once a show cause notice is issued, within like after 3 months, an order can be served. I cannot issue an order prior to issuance of a show cause notice. Unless a show cause notice is issued, I cannot serve an order. I'll just read the provisions of the 7310, which talks about your time limit. Order referred herein has to be passed within 3 years. Prior to that, they say notice should be issued at least 3 months prior to the time limit specified for passing the order. Determine the amount of tax, interest, and penalty. The order referred herein has to be passed within 3 years. Page number 19.6, Institute Material. Everyone listening to me, go to your page number 19.6, Institute Material. My clause B in page number 19.6, it says, order referred herein has to be passed within 3 years from the due date for furnishing annual return. For financial year to which the tax not paid, short paid, ITC wrong level replaced, to which this particular allegation or erroneous refund is linked with. They say a notice should be issued at least 3 months prior to the time limit of issuing the order. So, friends, my section 73 says minimum 3 months prior to the due date of issuing the order, I have to serve something called a show cause notice. Let me come back to my Excel file. When I know that order has to be served within 3 years, my show cause notice to be issued 3 months prior to above date. So when I say 31st December, November, October, November, December. So 30th September 21. This is 3 months prior to my issuance of order. So friends, here my law says that, look, first and foremost, you check the date when you have to issue an order. When you want to issue an order, minimum 3 months prior to that date, a show cause notice has to be issued. This is what the simple language the law talks about. Now, when you look at this particular thing, for issuing an order, I have 3 clear years. For issuing my notice, I need to have 2 years, 9 months. Now, examination, 2 marks problem in relation to issuance of a show cause notice. They'll give a case law saying that Mr. XYZ Limited registered under the GST law during so and so period called financial year 2018-19. Some transactions happen. The assessee, the proper officer, has served a show cause notice. But they'll give the dates. They'll ask you, examine whether the show cause notice issued is proper under the GST law. Now here, you know that for financial year 17-18, my show cause notice has to be issued on or before 30th September 21. Only then, an order under section 73 can be issued before 31st December. So what if scenario one, I'll put various scenarios. Scenario 1, scenario 2, my show cause notice, my order. My show cause notice is issued on, say, 31st October 20. My show cause notice is issued on 15th August 21. Let me put my financial year. My financial year is, say, 2017-18. My financial year is 2018-19. Now, they'll say, forget the order. A show cause notice has been issued on 31st October for financial year 17-18. For financial year 18-19, say 15th August. Examine the validity of show cause notice. Now, let me capture something called due date. My due date of annual return. In the problem, for me to solve the problem, they have to give the due date for filing annual return. Without this due date for annual return, I cannot conclude my answer. So for financial year 17-18, 31st December 18, and for 18-19, 31st December 19. Let me change the dates. Let it be there. Now, this is the due date for filing my annual return. Now, friends, first and foremost, we need to say an order can be served within 3 years. For serving the order, my 18, 19, 20, 21. So 31st December 21. This is a working back of the date by which an order can be served. That's the maximum. Beyond that, I cannot issue any order. Now, for the financial year 18-19, for the financial year 18-19, 3 years. So 20, 21, 22. 31st December 22. This is my due date for order. Give me a minute. There's a problem with Excel. Yeah. For due date for order. This is what I have captured. Now, once I have captured due date for order, let me capture due date for SCM. 3 months prior is what they're saying. When I say 31st December, 30th September 21. Similarly, for 22, 30th September 22. Now, this is my due date for issuance of show cause notice. Now, conclusion. Let me draw my conclusion. For scenario 1, my show cause notice issued under section 73. 31st October, my show cause notice was issued. But actually, my due date for issuance is 30th September. Okay, this is financial year 20, this is financial year 21. On or before 30th September 21, I'm supposed to get a notice from the proper officer. But proper officer is issued in the month of October 2020 itself. So yes, SCN is valid. Next case. Second case, for financial year 18-19, 15th August 21, my show cause notice was issued. So what is the due date as per the law? 30th September 22. The show cause notice was issued much within the due date. Again, I'll say, yes, show cause notice is valid. Show cause notice is valid. So examination, 2 marks problem you can expect on validating a show cause notice issued under section 73. Section 73. Please keep in mind, when I talk about section 73, my allegations are other than 3 elements. One is fraud, then misstatement, then is suppression. If any of these 3 are not there, then 3 years is what they say for order. 3 months prior to that is my show cause notice. Let me come back to my presentation. Now, you can easily remember 3 months, 3 years. Show cause notice. Now, section 73. 73 ends with 3. 3 months is for show cause notice. 3 years is for order. Now, this in relation to fraud, the same provision says, look, in relation to fraud, I have said with 3 years from the date of annual return, you should serve an order. Prior to issuing an order, at least 3 months, clear months should be there for issuing a show cause notice. So what if the order has been processed after this? They say within 3 years of erroneous refund. Now, whatever be the date of receiving order, from day 3 years, I will see for issuing a notice. Order, please keep in mind, in relation to order, my 3 years when I'm capturing, this is from the date of issuing the order. From the 3 years from the date of issuing erroneous refund, I will issue a show cause notice. The relevant of annual return or 3 years, whichever is later, that will be used by the departmental officer. So friends, this is something which we need to keep in mind in relation to the time limit, how we calculate the time limit. Now, let me see if there are a couple of any questions further. Ambika says, that means show cause notice within 2 years, 9 months. Yes, Ambika, you are right. Ambika is rightly saying, in relation to show cause notice, the time limit is given is 2 years, 9 months from the date of annual return. And further, she says, is it possible that show cause notice is issued within 2 years, 10 months of due date of annual return? Is it possible that a show cause notice is issued within 2 years, 10 months? Why is that 2 years, 10 months you are referring, Ambika? Within 2 years, 9 months, a show cause notice has to be served. Your question, next question. Show cause notice is issued within 2 years, 10 months of the due date of annual return. Then the time limit is lapsed, Ambika. Kindly remember, when my show cause notice is issued beyond 2 years, 9 months, it is not valid show cause notice. Within the 2 years, 9 months, if a SCN is issued, it is valid. If it is issued beyond that, straight away you can respond back to the officer considering that, look, as per the law, you have an authority to issue a show cause notice within a period of 2 years, 9 months from the date of filing of annual return. Beyond which, the moment you have issued, it is not to be considered as a notice under the law. I can straight away respond back to that notice. Next. This provision in section 73 says, look, there's a mechanism called issuance of a statement. Now they say, after issuing a show cause notice, there can be a mechanism where a proper officer would issue something called statement. I'll come to this statement to make you more clear. Generally, when the audit is conducted by the government officer, they conclude that these are the findings in relation to audit. Once they have concluded that these are the findings in relation to that particular period, they issue something called show cause notice. Now, once a show cause notice is issued, they go back to the, like they have something called internal meetings which happens on a fortnight basis. Commissioner, joint additional commissioner, joint commissioner, assistant commissioner, deputy commissioner. These people, in their presence, all the notices issued and the status of that will be discussed in the particular meeting. In the process of meeting, this particular person, there was one question from Jatin. I'll come to that question in this more. Assuming that the particular officer has issued a show cause notice. Now, sir, who is the proper officer? I'll come to my Excel file to explain this particular proper officer. Now, hope you are able to see Excel file. Let me increase the size a little more. Now, who is an officer who can issue a notice under GST law? My notice can be issued either by a superintendent, deputy or assistant commissioner, additional or joint commissioner. I repeat, my notice under GST law can be issued either by a superintendent, deputy or assistant commissioner, additional or joint commissioner. Now, there is a monetary limits. I would draw your attention to this column for monetary limits. It will be easy for you to understand. Let me highlight this column. Yeah. Superintendent can issue a notice where the tax evasion is not exceeding 20 lakhs. I repeat, a superintendent of central tax, similarly, superintendent of state tax, that gentleman can issue a show cause notice under section 73 where any of the allegations I have mentioned. Allegation means 4 aspects: tax not paid, tax short paid, erroneous refund, input tax credit wrongly availed or utilized. If any of these 4 allegations are there, a show cause notice can be issued by a superintendent, maximum not exceeding 20 lakhs. What if the amount is exceeding 20 lakhs but up to 2 crores? A deputy or additional commissioner. These are the officers who have been empowered. Deputy commissioner or assistant commissioner. These are the 2 people who can issue a notice where the monetary ceiling is up to 2 crores. Above 20 lakhs, up to 2 crores. So up to 20 lakhs, superintendent. Above 20 lakhs, up to 2 crores, my deputy or assistant commissioner. Now, additional or joint commissioner, above 2 crores without any monetary limit. Any tax evasion, any tax suppression, any recovery, any show cause notice. Additional or joint commissioner are the people authorized for a sum above rupees 2 crores, right? Now, this is what we need to keep in mind where a show cause notice can be issued when there is an allegation of tax paid to be paid but not paid. So, does it include interest and penalty? Answer is no. It is only in relation to your tax per se. Now, this is my hierarchy, and these are the people who are generally there to adjudicate. Question to answer question asked by Jatin. Sir, what if show cause notice is given by superintendent? The adjudication will be done by deputy or assistant commissioner. So what if the show cause notice is given by deputy or assistant commissioner? My adjudication will be done by either a additional or joint commissioner. Similarly, if this notice is given by these 2 people, my adjudication can be done by a commissioner. Right? This is how the adjudication happens. Jatin, hope I have clarified your point. Let me come back to my presentation. Okay. So, now, with respect to this particular process, where there is a meeting which is being discussed, a show cause notice was issued by a superintendent. A show cause notice was issued by a superintendent. whatever monetary limit was there, he has issued. In the process of discussion, they noticed that couple of other tax periods, similar tax evasion or similar practice was there. Money, superintendent has failed to cover all the tax periods where this tax evasion or the tax determination, whatever four allegations are there, one of the four allegations are there in any other period within, say for a financial year, they have issued a show cause notice. 1 month in the same financial year was missed out to cover in the show cause notice. Then they say that particular proper officer can issue something called a statement. I repeat, for a financial year, say 17-18, for a financial year 17-18, in the period 17-18, a notice was issued. After issuing a notice, they filled 1 month or couple of months. This allegation is also there, which was not covered under a notice. Then the proper officer may issue a statement. Instead of issuing again a show cause notice, he can give a statement containing the details of allegation. So they say that if a notice is already served, a statement can be issued to add up the allegations what was there in a notice. The moment I issue this statement, it is deemed that show cause notice is covering that particular allegation of statement. So to consolidate, to cut short, a notice can be issued. If something is missed out to cover in this notice, a statement can be issued. So what is the time limit for notice? What is the time limit for statement? Whatever is the time limit for this notice, the same is applicable for this statement. That means to say, both put together, that should be issued within the period of 2 years, 9 months. It should be issued within a period of 2 years, 9 months from the date of my annual return. This is what we need to understand with respect to a statement. Then, the service of a statement is deemed to be a service of notice which is issued on that particular person. Now, let me go further. Intimation to the proper officer. Now, this is one slide. Students who are listening to me, I would draw your attention to this particular slide called 73.5. I believe people who have experience in filing GST annual returns during the process of your articleship days, during the process of filing your GSTR 9 or 9C, you would have come across something called a challan DRC03. Challan called DRC03. The challan says Demand Recovery Challan 03. The name of challan is DRC03. That is one challan which is linked with this provision called 73.5. I'll explain the provision, then I'll take you through the importance of this particular provision. It says the person who is chargeable with tax, the person who is chargeable with tax. Please keep in mind, whenever I refer to the term person, this person, a registered person or taxable person. Person chargeable under forward charge, chargeable under reverse charge. Before serving of a notice, what they're saying, this person may, before serving of a notice or as the case may be statement, before the proper officer is issuing a show cause notice or issuing a statement, pay the amount of tax along with interest payable. Tax along with interest payable under section 50. Now what they say, the person who is chargeable with tax, this gentleman can pay the tax along with interest payable under what? Under section 50. How? On the basis of own ascertainment, the registered person or the taxable person on his own ascertainment of such tax or the tax ascertained by the proper officer. Now what they say, this gentleman can pay the tax along with interest. How? On the basis of his own ascertainment or on the basis of tax ascertained by the proper officer. And inform the proper officer in writing. Important thing. Inform the proper officer in writing of such payment. What should I inform? I have to inform something called such payment. I draw your attention. I draw your attention. This provision says that, look, the person who is chargeable means the allegation what is going to be put across, the person, like you are a chartered accountant, you have done the audit of the books of accounts of the assessee, you have brought to the knowledge of the registered person, look, these are the four allegations which can be brought in by the department. For the financial year 18-19, I have conducted the audit. I have noticed that these are the taxes you ought to pay but not paid. This findings was reported to the registered person. I repeat, the auditor, so-called chartered accountant, did the audit, was reported to the assessee saying that, look, this is the taxes ought to be paid but not paid. Once that was communicated to the registered person, then that registered person, what he can do, he can pay the tax along with interest. This is something which is very, very important. Very, very important. Now they say the person who has to pay, he has paid the tax along with interest. Sir, not only tax, interest is compulsory wherever my provisions of section 50 is applicable. We have discussed the provisions of section 50 where how to calculate my interest, right? Wherever tax has to be paid for what? Four of the allegations. You pay tax alone or tax plus interest. Answer is tax plus interest. How do you pay? You pay on own ascertainment. Now question comes here. So my chartered accountant who did the audit of my books of accounts, he brought to my knowledge, my chartered accountant who did the audit of books of accounts, he brought to my knowledge that this is a tax payable. Can I call that as it's as a own ascertainment? Answer is yes. Any tax which is paid as per the directions of a professional can also be called as a own ascertainment. Or the tax is paid as ascertained by the proper officer. That means to say, you go back to my first discussion of Excel file, where I said audit memo. Before to issuing a show cause notice, audit memo will be given. That is a point in time which I call as ascertainment by the proper officer. My proper officer, before he wants to serve a show cause notice, he gives me something called audit findings, audit para, audit memo. That is something I call as ascertained by the proper officer. Once I paid the tax, inform the proper officer in writing. Now, let me come to my Excel file. To make you understand this communication in writing. Now, section 73(5). I would recommend this one provision, let it be there on your tongue for the people who are going to get into practice. 73(5) is one provision you come across day in, day out whenever you are dealing with the taxation matters of the assessee concern. 73(5) says that tax payment along with interest. This on own ascertainment or as per the ascertained by the proper officer. Ascertained by the proper officer. Once you are paid, they say, please communicate in writing. Please communicate in writing. Now, under GST law, there is a challan by the name GST form GST DRC 03. A challan filled with the relevant details and filed on GST common portal. Right? Now, when they say communicate in writing, this is nothing but filling up this form called GST DRC03. This form DRC03 is a form which, if I've filled the relevant details and I have filed that form, then it means that the communication is given in writing to whom? To the proper officer. This communication is given to the proper officer. Now, hope you have understood this 73.5 where the tax was ascertained and the tax was paid. Now, once I do that, what tax payment along with interest? Tax payment along with interest. What does my law say? Intimation to the proper officer. The proper officer, on receipt of such information or intimation from whom? From the person who is chargeable with tax, that proper officer shall not serve any notice as the case may be statement. This is the crux of your validation. This is the crux of your professional validation. My proper officer shall not serve any notice or a statement in respect of the tax so paid or penalty payable. Now, what they say? The moment you file your challan, DRC03, the proper officer shall not issue any notice. He shall not serve any statement for what? In respect of the taxes so paid or any penalty payable under the GST provisions. In general, wherever tax to be paid but not paid, penalty provisions do come in. Tomorrow's session, I am going to cover on penalty provisions. The moment you file DRC03, a show cause notice is avoided. The moment show cause notice is avoided, my penalty is made 0. I repeat, the moment I file my DRC03, the penalty provisions are avoided. How? Show cause notice is avoided. Without show cause notice, a penalty cannot be demanded from the registered person. Students, this is one value addition which you're going to take back from your learning in this indirect taxation when you get into the practice. So the law says, if any intimation is given to the proper officer, this proper officer, to the extent of those taxes for that particular allegation, he shall not serve a statement, he shall not recover the tax along with penalty. This is what they say under section 6. Now, what if having communicated, the proper officer is of the opinion what you have paid something under section 73.5, but it is shortfall. Whatever tax you have to pay, you have paid. But I notice that there is a shortfall in payment of tax. Then, to the extent of that shortfall, issuance of notice can happen. Right? Whatever you have paid, that shall not be demanded. What is shortfall? Only that will be demanded from you by way of issuance of a show cause notice. Further, where any person chargeable with tax as per the show cause notice or statement, he pays the said tax along with interest payable under section 50 within 30 days of issuance of a show cause notice. Now, what they say, I as a registered person, I don't know that I have to pay this tax. Only when a show cause notice came, I realized that I have to pay this tax. So what they say, a person chargeable with tax where a show cause notice or a statement is issued, this person pays the tax. This person pays the tax when it pays the tax along with interest within a period of 30 days. Within a period of 30 days. So the moment a show cause notice is issued, within a period of 30 days, I pay the tax along with interest. Then what they say, penalty is something not payable. Penalty is something not payable. Now, under GST law, why is that so important that you need to read this provision? I'll give you the background which makes you clear to understand this seriousness of this particular provisions. Assuming there's one transaction where the value of supply is 10 lakhs. The value of supply is 10 lakhs. On that particular supply, I have charged GST at the rate of say 12%. But the actual rate of tax happens to be say 18%. Now what is the gap in that? 6%. Instead of paying 18%, I have paid tax at the rate of 12%. 6% is a shortfall. Assuming I have a profit margin of 5%. I have a profit margin of 5%. Now, the officer, after a period of 2 years, let me come to my Excel file so that you will have much impact on understanding this particular provision. Let me come to my Excel file. Yeah. Say, during December 2018, there is a supply. A value of supply, taxes paid, taxes payable. Say, I presume the value of supply is 10 lakhs. The tax is paid at the rate of 12%. Tax is actually payable at the rate of 18%. Now, I have paid tax at the rate of 12%. But what the law says, he has to pay tax at the rate of 18%. Shortfall. Now, this was noticed when this shortfall was noticed during, say, we are in March 21. Say, during the course of classes, you as a professional have learned that these transactions are taxable so much. You went back after your exams and told to the assessee, boss, you have short paid 60,000. Now, what is a gap? December 18, so financial year 1920, 12 months. Financial year 2021, 12 months, plus Jan, Feb, March, 3 months. My total months where there is a delay was 27. Now, assuming my due date for payment of tax is for the month of December is say 20th Jan 2018. Actual date of payment is say 11th March 2021. January 18 is my due date. 11th March is what I am paying my taxes. How much is the gap? 146 days is the gap for this particular tax payment. So if I have to calculate my interest is 60,000 into 18%. This is for a period of 365 days. So I'll say into 1146 divided by 365. This is my interest which is calculated. So what is the penalty? Penalty equivalent to the tax amount. Now, look at the cash outflow. Assuming you happen to be the finance manager. My cash outflow required is 1,53,909. What is the percentage in terms of my supply value? When I look into supply value, 15% is what I have to pay. 15% is what I have to pay on account of non-compliance. Now, sir, what if I have profit margin of 5 to 6%? If the profit margin on that particular supply is only 5 to 6%, please put yourself into the shoes of a CFO. Look at the working capital issues. One simple mistake on one transaction is going to cost you on an average 15% as a non-compliance. One, this is the money you will be paying in cash. Second, forget the tax portion. Second, your cash outflow, which is happening, is going to hit to my profit and loss account. Disallowance under income tax law. This is the biggest exposure you are going to have in relation to this. Now, so what is the value addition I can do as a professional chartered accountant? Assuming, sir, can I save this Now, answer is yes. When I go with a provision called 70 under section 73(5), when I go under section 73(5), for a moment, I make this value as 0. From 15%, I brought down the exposure to 9%. How much is it saving? 6% is what you're going to save straight away to the organization by way of intimation to the department under a challan called DRC 03. Right? So friends, this is what the importance for you to understand my provisions of section 73(5), provisions of section 73(5) for the purpose of payment of taxes. Coming back to my presentation, this subsection 8 says that, look, you have to exercise your benefit of DRC 03. You fail to exercise. Don't worry. The moment a show cause notice is issued, you as a taxable person, you pay the state tax along with interest. So when you should pay? I'm paying within a period of 30 days. I'm paying my tax along with interest. If I do this particular thing, my penalty is waived off. No penalty. This is the importance of getting a show cause notice under section 73. Having fought whatever happened internally, you make the payment of that particular tax along with interest. No penalty is applicable. All proceedings under this said notice is deemed to be concluded. They say deeming fiction of conclusion. This is the importance of my section 73. Now, friends, hope you have understood the seriousness and importance why a notice has to be read carefully. Importance why DRC 03 can be utilized, where interest burden can be reduced, where penalty is completely waived off. So what if I have missed the route of DRC 03? Don't worry. The moment you get a show cause notice, within the period of 30 days, you make the payment. No need to pay any penalty. So this is what we need to understand with respect to our penal provisions. Now, issuance of an order. Now, a show cause notice has come. You, as a registered person, you feel whatever allegations were brought in by the departmental officer. When I say allegations, non-payment of tax, short payment of tax, erroneous refund, wrongly availed or utilized, any of those 4 allegations. You are a tax person who knows the provisions in and out. There was a difference of opinion. The way you read your English, the way department officer read the English, you don't agree. Both of you have a disagreement. So you say, the moment the audit para is received, audit memo is received, I'm not going to agree. I'll give you an example. Renting of immovable property. The registered person has availed input tax credit in relation to, say, hotel accommodation. Now he says, as per the law, there is no restriction for me to take the credit of hotel accommodation. Officer says, no, Praveen, you cannot take the benefit of ITC. Audit memo has come, I replied. Show cause notice has come, I replied. Then officer says, Baba, even after receiving show cause notice, you have not paid anything within a period of 30 days. Now the officer is bound to respond to that. The proper officer shall, after considering the representation, if any, made by that particular person, he determines the amount of tax, he determines the amount of interest and penalty. What? Tax, interest, penalty. This penalty equivalent to 10% of the tax or 10,000 rupees, whichever is higher from the date of due from such person and issues an order. In this particular provision, they say, look, tax and interest is something which is in regular course of time. First time, penalty is discussed in my show cause notice when a stage where order has to be issued. So what is my exposure? They say 10% of the tax or rupees 10,000. Out of these two, whichever is higher, that shall be the demand of my penalty. They say, you having been registered, you don't agree with the show cause notice. I'm going to issue an order for tax, interest, and a penalty. Examination, again, a 2 marks question for quantification of penalty. Please remember, examination, A 2 marks question on this para, how a quantification of penalty has to be done. I'll come back to my Excel file to make you understand this particular provision. Now, we have understood a while ago validity of show cause notice. Assuming along with the problem, they've asked validate whether show cause notice is correct. Also, a quantification of order. Now, tax is demanded. Now, one on account of non-payment of tax, say demand they have brought in is say 2,50,000. Then second is with respect to your ITC wrongly availed. Now ITC wrongly availed say rupees 85,000. Now only these are the two allegations which are there in my notice. Now order served with a penalty equivalent to tax. Now, they say you have to pay tax of 3,35,000 and also a penalty of 3,35,000. Then you will say no as per section 73. Provisions of section 73. Read with my provisions of section 73. Read with section 73, subsection 9. Penalty is either rupees 10,000 or 10% of tax, whichever is higher. Now, in this case, you will say 1, 10,000. 2, my tax demand into 10%. So conclusion, max of so this is my conclusion. You will say order that can be demanded under provisions of section 73, subsection 9 is rupees 33,500. The contention of the departmental officer is erroneous, is what your conclusion would be. Let me come back to my presentation. Now, friends, I'm spending so much of time on this for the simple reason, examination, please expect a 4 marks case law from these provisions, whatever we are going to discuss till now. Before I go further, let me see if there are any doubts till now. Ambika says, order is passed within 1 month earlier. Okay. Order can be served maximum with Ambika, order can be served within a period of 3 months, 3 years from the date of annual return. Prior to serving order, a show cause notice has to be issued minimum of 3 months. Now, just keep in mind, unless a show cause notice is issued 3 months prior to an order, my order has no validity. Waiver says, in most of the cases, clients ask for unofficial settlement. Let us not discuss all those aspects, Waiver. Audit memo is a form of communication before show cause notice. Ambika asks, audit memo is a form of communication before show cause notice. Yes, Ambika. Before a show cause notice is issued, my audit memo is a self-speaking statement, which are nothing but the audit findings of the audit team concerned. That is called audit memo. You are right, Ambika. Let us come back to my continuation. Applicability of penalty, self-assessed tax. Now, this is one important aspect which we need to keep in mind. Notwithstanding anything contained in subsection 6. Subsection 6 is nothing but once I communicate 73.5, no notice under subsection 6. Subsection 8, there is a payment of tax. Penalty under subsection 9 shall be payable where amount of self-assessed tax or any amount collected as tax has not paid within a period of 30 days from the due date of payment of tax. Now, just keep in mind, I'll come to my 73A to make you better understanding of this. See here, 73A says, where a person chargeable with tax as per show cause notice, he pays within a period of 30 days. Once I receive a show cause notice, within a period of 30 days, when I pay tax with interest, no penalty is applicable. Now, under subsection 9, penalty quantification, 10% of tax or 10,000. They say, my penalty under subsection 9 is payable, shall be payable when, me get the annotation, yeah. My penalty shall be payable where amount of self-assessed tax or amount collected as tax has not been paid within a period of 30 days from the due date of payment of tax. Now, they say, look, there is a mandatory payment of penalty in case you fail to pay a tax within a period of 30 days from the due date of payment of such tax. Now, you have collected, like you raised a tax invoice, you receive money from your customer. Now, there is another provision, 76, which deals with that. As of now, please keep in mind, when we talk about show cause notice under section 73, two exceptions are there. What are those two exceptions? First exception is self-assessed tax. Second exception is amount collected as tax but not paid. Please keep in mind, whenever I refer to section 73, my two exceptions for penal provisions. A registered person who defaulted in payment of self-assessed tax. So what do you mean by self-assessed tax? For a particular tax period, what is my sales? What is my purchases? On sales, this is my output tax. On purchases, this is my input tax. Examine output tax, examine input tax, do the set off, derive the net tax payable. That is called your self-assessed tax. They say a self-assessed tax not paid within a period of 30 days. How? From the due date. Then they say a penalty is something which is applicable under section 73. Notwithstanding anything, though you paid within a period of 30 days of show cause notice, or you paid under 73(5), they say the moment you have defaulted, you have to pay a minimum penalty, 10,000 or 10% of the tax, whichever is higher. So first is your self-assessed tax. Second, amount collected as tax. I'll come to section 76 where you will understand the severeness of this aspect called amount collected as tax. As of now, they say this penal provision is something which cannot be avoided. So this is something which we need to understand under section 73. Now, we are getting into the next provision called section 74. All along, whatever we have discussed, this does not have the taint, the color, the allegation, the intent of fraud, misstatement, suppression. I repeat, whatever we have discussed now, till now, none of the allegations on account of a fraud, misstatement, suppression. These three aspects does not exist, right? That is my section 73. Section 74 comes where the proper officer is willing to determine the allegation for what? For any of those four elements where there is a existence of fraud, willful misstatement, suppression of facts, which I call as allegation. Now, I ask all of you sitting, listening to me, a simple question. Is it that easy to pinpoint someone and say, look, you have an intention to commit fraud. You have an intention to misstatement the facts or suppress the facts. Is it that easy to pinpoint to someone and say, please keep in mind, when you do an audit, please recollect your internship days. Internal audit or management audit or a proprietary audit. Whenever you do audit, you come out with observations. When you put across these observations to the assessee, 99.99%, there is something called non-acceptance of your audit observations. Whatever observation you put across, The client tried to defend, the client tried to negate with you, saying that no, your observation is incorrect. The same way, 99.99% of the time, the government officer will come to the assessee with this particular provision called Section 74. He will issue a notice saying that you, as a registered person, you have fraudulently not paid tax. You have fraudulently short paid tax. You obtained a refund fraudulently. You have availed input tax credit fraudulently. Now, please keep in mind, it is easy to bring this particular allegation, but the proper officer has to establish on record a evidence for existence of any of these three elements. Existence of any of these three elements. Let me come back to my Excel file. To demonstrate how this happens in a practical scenario. One is fraud. Second is misstatement. Third is your suppression. Now, fraud. We have something called bogus or sham transactions or window dressing. Now, you as a professional, the moment you read the financial statements, out of your expertise, I draw attention to the previous session where we have discussed, where Venkat, I believe one of our friend asked, sir, how do we get empaneled with the commissioner for doing a special audit? I come from that particular discussion. The moment you read the financial statements out of your acumen, you say, these financial statements are bogus, fictitious, there are sham transactions. I believe that this business is infructuous reason they have given a stock statement where the stock holding is for a period of 6 months. My Sunday creditors, average Sunday creditors is for a period of 2 months. Money, you try to correlate. You're not good in your cash flow. You say my inventory holding period is 6 months. You say the input tax credit accumulation is very higher. You say my average turnaround of Sunday creditors is for a period of 2 months, and my payout for Sunday creditors is 2 months. When you try to come from various analytical points to say that there is a culpable my status of mind. I use a term called culpable status of mind. When this particular status of mind exists, you call that particular assessee as a fraudulent activity. Misstatement. ITC wrongly availed or excess availed. I'll give examples for this. So my supplier has given a bill with IGST, but in books they are accounted as CGST, SGST and CGST. Can you not say that it is a misstatement? You have claimed a credit called IGST. Actually, the bill says CGST and SGST. Isn't it a misstatement? Look from the government point of view. Sir, a mistake is a mistake. You don't have right to say that it is a small mistake. Kindly ignore, kindly pardon that particular mistake. Put yourself into a position of a surgery. A doctor does a small mistake in a process of surgery. Can I call that as a small mistake? Now, come from that particular angle from revenue collection point of view. Now, there is something which is something called mistakes which are not serious. Maximum up to a sum of 5,000, maximum up to a sum of 5,000. Government says, no, it is not a serious fraud. So you can ignore that particular thing. Or I'll give you one example. I have to account the bill instead of accounting as 1,12,000. I've accounted the bill as 1,21,000. Look at this. Now, can you call that it is a misstatement? Possibility that it's a misstatement. Now, when you see the difference, I have availed 9,000 more than what should I have availed. Sir, this is a clerical mistake which is apparent on the record. If 1,12,000 has been accounted as 1,15,000, then you can call that It is a misstatement. The 1,12,000 was accounted as 1,21,000. Human error. Tendency to do a mistake while doing the data entry. 121 has punched as 112. 152 was punched as 125. 161 was punched as 116. But these are all human clerical errors, data entry mistakes. So if it is a data entry mistake, I'll call it is not a misstatement. You need to establish that particular thing as a supporting document. Now here, excess availed is rupees 9,000. Now you as an auditor, you need to ask a question. What is that? What does the bank payment say? When I issued a check to the supplier, when I made the payment to the supplier, did I pay to the supplier the basic value plus tax called 1,12,000 or 1,21,000? Assuming you paid to the supplier 1,21,000, you also accounted input tax credit of 1,21,000. Then you say, sir, it's a clerical mistake. Look, I prepared my accounting entry, I prepared my input tax credit, I also made the payment to my supplier called 1,21,000. This is a this is a state of affairs where there is no misstatement because I have a corroborative evidence, I have a additional evidence to protect the interest of my misstatement. So what comes here to rescue your misstatement is your additional evidence. If the additional evidence is in your favor, you can argue with the department saying that no, it is not a misstatement, it is a clerical error. So why I'm discussing all these things? We are seeing whether we can get away from this 74 and land up in provision called 73, where we are trying to take the associate from this misconception of the department allegation from fraud, misstatement, or suppression to a new window called a plain vanilla case of no fraud, no misstatement, no suppression. Finally comes is your suppression. Very, very important. Suppression, example, turnover wrongly presented. Now, a accountant with improper control, a accountant with a less knowledgeable person who tries to change the accounting entries without knowing the repercussions. I'll give an example. We had this issue which has come yesterday. Out of the discussion, it is relevant for you to understand. We had this concept called e-invoice under GST. E-invoice under GST. This transaction is dated to 15th Feb 2021. 15th Feb 2021. Now, as per tally, as per e-invoice. Now, as per tally, there was a accounting entry made for 1,50,000. E-invoice, for your information, T plus 2 they say. That means to say, whenever a transaction takes place, within a period of 2 days, my e-invoice has to be generated. So if I go on third day, the portal does not permit me. From the transaction, within a period of 2 days, my e-invoice has to be generated. 15th February, if I generate an invoice, 16th, 17th, by midnight of 17th, I have to generate a e-invoice. When I go to the portal on 18th Feb, the portal says your transaction is beyond the date permitted. So the gentleman has prepared a e-invoice of 1,50,000. After a week's time, this particular gentleman, what he did, he changed this particular transaction from 1,50,000 to 1,80,000. He changed his tally. My entry of 1,50,000 was changed to 1,80,000. And today, when he was filing his GSTR1, his GSTR1 shows 1,80,000. Now, what is happening here? My e-invoice portal shows 1,50,000. My GSTR one shows 1,80,000. Now, is it a suppression? Now, question comes here is, if this gentleman did the correction before filing of return, if I pay taxes on the revised invoice, well and good. Assuming this correction of 1,50,000, it is done on, say, 31st March, when the audit is being done. Auditor said, look, Mr. Accountant, you received 1,80,000 from the SSC. Your bank account shows a receipt of 1,80,000. Why you accounted as 150? Out of audit entry, instead of posting an entry for 30,000 separately, this gentleman on 31st March 2021 posted a backdated entry or rectified the original entry. Imagine, on 15 February, 1,50,000 is what I have accounted. 31st March, when you're conducting the audit, you alerted the accountant, look, the bank statement shows 1,80,000, erroneously you have given 1,50,000, please do the rectification entry. This gentleman doesn't know what he did. He went back and rectified in tally from 1,50,000 to 1,80,000. The moment this is done, 1,80,000, when there is a audit from the department, suppression of turnover, they say you have suppressed your turnover whereby intent to evade payment of tax, suppression of turnover. These are the allegations which can be put forth from the audit perspective. Let me come back to my presentation. Why I'm telling all these things? It is important for you to note that these are all the allegations which has a serious ramifications when a show cause notice is issued. Now, they say my GST law, section 74 says, what do you mean by suppression? Whatever examples I've said, in addition to that, section 74 has an explanation. For the purpose of this act, the suppression means non-declaration of facts or information. The example of 1,50,000, what we have said, 1,80,000 was actually there in my bank statement. In February, when I have received money, my bank statement shows 1,80,000. But what I did in my GSTR one, what I did in my e-invoice, assuming I've showed 1,50,000, it says non-declaration of facts. So when you have received money, my bank receipt entry in Tally, in SAP, in ERP shows 1,80,000. Now when you have received 1,80,000, you have disclosed the turnover for your GST return only 1,50,000. That means it's a non-declaration of facts or information. I'll give one more example with respect to this element called information or facts. This particular non-declaration of facts or information. Say there is a receipt of consideration. On account of sale of immovable property. I repeat, in the month of January 2021, the registered person sold an immovable property for 30 lakhs. The registered value, the sale value, which was registered in the for stamp duty purposes, 30 lakhs. This 30 lakhs was accounted in Jan 2021 in the books of accounts. When I'm filing my GST returns, there's something called non-GST supply. I have failed to show that 30 lakhs in Jan 2021. Jan gone, Feb gone, March gone. Can you call that it is a non-declaration of facts? Now, the money received 30 lakhs. Is it a fact? Yes or no? Answer is yes. Now, the moment you fail to show, isn't it a suppression? Answer is big yes. I believe, I don't remember one of a student named Kritika or someone asked in the previous session, sir, GSTR 9C, if there is a turnover where tax ought to be paid but not paid, was paid subsequently, should I bring that fact into my GSTR 9C? Answer is a big yes. My annual returns, GSTR 9 or 9C, is one window, is one mechanism. I bring that particular non-disclosure or non-declaration and show. So this is a turnover, I failed, I forgot. So kindly give me an opportunity to rectify that mistake in my GST annual returns. Now, when I declare that in my GST annual returns, that suppression is taken care. Further, they say information which a taxable person is required to declare in a return or a statement, report or any other document furnished under this act or rule. Fail to furnish any information on being asked for. in writing by the proper officer. They say there is a proper officer appointed by the law. This proper officer asks for some information. You fail to provide that information. Now, I draw your attention here called furnish on information. My proper officer says, Praveen, give me balance sheet, give me your financial statements, give me a stock statement. Now I'll say, sir, you have asked for financial statements. My balance sheet includes my closing stock. I will give you only financials. I'll not give you closing stock. Now, can I say so? There is an information which was called for. If I fail to give that information, I would be called as a person called suppression. So this is something we need to keep in mind. My provision explains what is called as suppression. Now, section 74, subsection 1 says, look, where there is a proper officer has a reason to believe that any of these four allegations, look, there is a reason by virtue of fraud, by virtue of willful misstatement, by virtue of suppression. The officer is making his judgment. He has the reasons for believing that you have not complied. Then this proper officer can issue a show cause notice, right? This proper officer has a right to issue a show cause notice on whom? On that particular person. Whatever we have read already, the same things. What he can do, he'll say, Baba, you have not paid tax, you have short paid, you have wrongly claimed, you have wrongly claimed the refund, etc., etc. And he issues a show cause notice. Important thing, when he is issuing a show cause notice, look at the language they use. They say, my show cause notice can be issued where an allegation of penalty equivalent to the tax specified there in the notice. My show cause notice says, you as a taxable person, you are a fraudulent person, you have misstatement, you have suppressed the facts, because of which pay a penalty equivalent to 100%, penalty equivalent 100%. Please recollect the example which I have explained. For that 60,000, what I have to pay? Instead of paying 1,80,000, I paid 1,20,000. That shortfall of 60% resulted me in a total tax interest penalty of 15%. If I remove that penalty, it came to 9%. 6% was a straightaway saving. Now, under section 74, if the officer has put an allegation which you don't have a way to come out of that, then you are forced to pay that penalty, right? This is what my notice is going to talk about. Now, let us go further. Now, what is the time limit? Like what we have discussed under section 73, it is linked with annual return. Look at your due date for filing annual return. The provision says maximum within a period of 5 years, an order has to be served. Before you issue an order, ensure that 6 months prior to the order, a show cause notice has been issued. Look at the language. They say within 5 years, you can serve an order. You can issue an order. Before issuing an order, at least 6 months prior to the order, you should have served a show cause notice. That means to say, 4 years, 6 months, like Ambika, what she was saying earlier, 4 years, 6 months is the time limit for issuing a show cause notice. And within maximum 5 years, my order can be issued. Now, 4 years, 6 months, if you have calculator next to you, please put into the calculator and tell me what is 4 years, 6 months into 18%. I'll come to my Excel file. Interest 18% per annum, right? Now 4 years, when I say 4.5 years, 4.5 into, look at the percentage. My goodness, 81% is my interest. And penalty, 100% of the tax. Now, in the previous case, if you have to read about my tax, interest, and penalty. Now, tax of 60,000. My interest is 81% of tax. My penalty equivalent to the tax. How much is that? Now, look at this. On a transaction value of 10 lakh, look at the percentage. 16.86%. So do you have so much of profit? You are going to be the future CFO. You are going to be the auditor. Do you have that thick margin of 17% in your business? Can you withstand to that? Now, not only that, the interest penalty the moment you pay, disallowance under income tax. Look at the serious implications. The 16 will go up to 30% disallowance, 30 plus 16. Assuming I say this plus 30%, 46.86. The rounding off with the admin cost and other things, the audit professional fee and all. 50% is your exposure for one transaction. Across the year, say auditor has got 5 transactions, 50% of the transaction value. 50% of the transaction value. If the transaction value is 25 lakhs, 12.5 lakhs is your exposure on account of non-compliance. Friends, this is the implications of a show cause notice issued under Section 74. This is the reason we need to understand how to get away from this non-compliance, how best the compliances can be taken care for the assessee. Let me see if there are any questions so far. Okay, so far so good, no questions. Now, so what if there is an order which was served? Now, 5 years is my time limit for passing an order, 6 months prior to that a show cause notice. And in case if there is an erroneous order, 5 years from the date of sanctioning your refund, 5 years from the date of sanctioning your refund, they can issue a show cause notice. That is what they say. Now, a statement similar to my Section 73, in case a show cause notice is issued, they found some mistakes which was not covered, they can issue a statement. Once a show cause notice is issued with a statement, once a show cause with a statement, this is a small difference which you need to understand. A statement can be issued. The service of a statement shall be deemed to have been served under 73(1). Now, Section 74, fraud, willful misstatement, and suppression. Any statement which is issued, this shall be considered as if this was issued under Section 73. No attachment of fraud, suppression, misstatement of facts. And whatever the time limit is there, that shall be deemed to be covered for the particular statement which is issued. Sir, do I have a rescue of DRC 03? What you have explained to me under Section 73(5)? Answer is a big yes. They say, you as a taxable person, before a notice is given to you, you pay the tax along with the penalty equivalent to 15%. Now they are saying, prakshalana means you try to wash out your sins. When you dip in river Ganga, all your papas are taken away. Similarly, when you pay penalty equivalent to 15%, how my tax along with interest pay a sum of rupees 15%. If these three components are paid, now how this was paid either on the own ascertainment or ascertained by the proper officer. If all these three things are done in writing, then your show cause notice is avoided, right? Now, I request you to go back to my Excel file where I've explained fraud, misstatement, suppression of facts. If any of these three things exist at a later point in time, like you as an auditor, you do a postmortem analysis. When you have done, you will say, look, Mr. Assessee, registered person, your books of account shows the fact of 1,80,000 as a turnover. When you filed your return, you showed only 1,50,000. Reason, this is a fact of 1,80,000. A bank statement was also received for 1,80,000. 30,000 I call as a suppression. The moment there is a suppression, you're duty bound to pay the tax along with interest, a penalty which is equivalent to 15%. You cannot recommend your client saying that you pay tax and interest, that is good enough. You ought to pay along with a penalty of 15% when there is a suppression of facts. Let me go further. Now, once the proper officer has received the intimation under 74(5), then the proper officer will not serve a notice. The moment you file DRC 3 challan, The moment you file your DRC03 challan, then that gentleman will not serve any order. Similarly, the moment you file your 74-5 DRC03, if the proper officer feels that you, as a registered person, there was a shortfall, means you did an error in payment of tax, to the extent of that shortfall, he can issue a show cause notice under 74. Only to the extent of shortfall. Now, where a proper officer, he say like he is whatever tax was due was not paid, then the proper officer shall issue a show cause notice under section 74. And once I receive a show cause notice, means DRC 3 option is ruled out. Officer has given me a show cause notice. Where a person who is chargeable with tax as per the show cause notice, he pays the said tax. Now look at the beauty. They say he pays the said tax along with interest and a penalty equivalent to 25%. A penalty equivalent to 25%. You pay voluntarily before a show cause notice. You pay voluntarily before a show cause notice. 15% is exposure. After receiving a show cause notice, you are paying that 15 enhanced to 25%. How? If you make the payment within a period of 30 days of show cause notice, right? So let me recap once again. There was some sort of non-payment. You as an auditor have done the audit and you notice there was a suppression of facts or there was a misstatement of preparation of a statement. Because of these two, you say you did something wrong, you short paid the tax. The moment you pay voluntarily, 15% is a penalty. No, I forgot and auditor also didn't recommend it. The show cause notice has come. When a show cause notice has come, you pay the tax along with interest and a penalty up to 25% of the tax. Everything, all the proceedings are deemed to be concluded under 74. This is what my 74.8 talks about. Next, moving on further. The proper officer, like you haven't done anything. You as a registered person, you have been defending yourself. You have been not accepting the contention of the officer. Like officer say, Praveen, you have taken a wrong credit. I as a registered person say, officer, your understanding is incorrect. I have paid my proper tax. There was no escape. There was no shortfall in payment of tax. The contention is still continuing. Then the officer cannot do anything within a period of like from the date of show cause notice. This gentleman has to pass an order. What will happen? The proper officer, after considering all the representation made by this gentleman, made by the person with the tax, determines the amount of tax, interest and penalty due from such person and issues an order. How much is the order penalty? As I said in the beginning, penalty equivalent to the tax amount. Now, so once an order is passed, in the order, the office is going to say 100% is a penalty. But again, government wants to reduce their burden. Assuming you made your mind, saying that, sir, I don't want to go for litigation. Let me kill the litigation over here. They say a person on whom there was a show, this order was issued, and that particular person, he pays the tax along with the interest and a penalty which is equivalent to 50% of the tax. 50% of the tax. Then all the proceedings are concluded. Look at the beauty. A show cause notice is issued within 30 days. Within 30 days, you pay. My penalty from 100% gets reduced to 25%. Order was served. The moment you receive an order, generally in order 100% penalty, they'll confirm. But again, government wants to give a redressal. They want to reduce the litigation. If this gentleman, this registered person comes forward within a period of 30 days, the moment an order is filed, order is passed, within 30 days, if this gentleman is coming forward, the penalty is going to reduce. How much? 50%. 50%. This is what the law says in relation to section 73, section 74. Kindly read this particular section 73 as section 74. This is a typographical error. Section 74. Under section 74, subsection 11. Under section 74, subsection 11. So if I get an order, within a period of 30 days, I pay this particular tax, everything is closed. Matter is settled there itself. Let me see if there are any questions till now before I go further. Hope things are clear now. It's not going too technical. Students, if you feel that the discussion is going too technical, you want to give little more examples, please feel free to put across. I see no questions so far. Let me proceed with my discussion. Next. There is a notice, sorry, there is an explanation under 73 and 74. All proceedings in the said notice shall not include proceedings under section 132, punishment for certain offences. Keep in mind, like in Hindi, we use a phrase, ये provision सबसे बड़ा बाप है, माने सबसे बड़ा है provision. This section 132 is one of the ultimate or superior provisions compared to any of the provisions. This 132 talks about punishment of certain offences under chapter 19. Pray to God that this punishment of certain offences you never ever come across in your lifetime. Reason, there is a possibility for the officer concerned to bring an allegation on the company, on the management, on the professional who has been advised, on the professional who has advised the company for a particular offense. The offenses under section 132 are serious offenses. That is the reason they say conclusion of an proceedings under section 73-74 is a conclusion, but for 132, that means if there is an offense which is covered under 132, though a notice is issued, though an order is issued, once you make the payment of taxes, reopening of that particular provision, if at all, that falls under the provisions of 132, you are not secured, you are insecure. Any of the offenses, non-payment of tax, short payment of tax, ineligible refund claimed as a refund, or you have a wrong availment of input tax. Any of these four matters have been settled under 73 or 74. Later, the provisions of section 132 are triggered by any of your investigation of any of the assessee. If your case is reopened under section 132, then all proceedings of 73-74 does not come to your rescue. It will be opened afresh, and again you will be put for offense. The last session we have discussed arrest 2 crores up to 2 crores, any litigation under section 132. 2 crores to 5 crores, 3 years is an imprisonment. Any offense above 5 crores, 5 years is a imprisonment. Imagine imprisonment, lifetime, a black mark on your career. So this is one serious proceedings where they say conclusion of proceedings under 73-74 does not prevent my section 132. Second important aspect, where a notice under this provision, Shokan's notice is issued, proceedings is issued. Issued to whom? To the main person. Who is the main person? In case of a company, liable to pay tax, and some other persons. Who is that some other persons? Managing director, manager in charge, officer in charge. In case of a partnership firm, partners in charge. Please keep in mind, they say the moment there is a conclusion of proceedings under 73-74, those proceedings for all other persons shall also be deemed to be concluded. The proceedings, once it is concluded under 73-74, the proceedings under the recovery proceedings of 122, 125, 129, 130 are deemed to be concluded. Just to bring your attention to give a clarity, my offenses. Now, these provisions called 122, 125, 129, 130. These four, tomorrow morning I'll brief you. Now, these four provisions say the moment there is an offense, along with the company, the show cause notice generally bring the allegation on other persons also. That means to say, a joint responsibility. Artificial person does not function on its own. Artificial person has a living beings who support for decision making. Now, a notice generally is issued on the artificial person, clubbed with the persons, natural persons who support that artificial person. Whenever a show cause notice is issued, along with the allegation on the company, managing director or manager finance or director finance or manager in charge, any of these persons are brought together as a person in charge for that culpable offense. So any of these offenses are indicated 122, 125, 129. These are offenses, a penalty. Whenever the officer has to raise a penalty, the officer will be guided under these provisions how much should be the penalty levied. Now, they bring a joint responsibility on the company along with other person. So when there is a responsibility along with other person, if the matter has been rested, if the matter has been settled, concluded under section 73-74, it is deemed that the matter has been concluded on the other person in charge. So this is one important factor you need to keep in mind. All of you, you're going to get qualified very soon. The moment you get qualified, when you have to give advisory, like you would start your practice in terms of drafting your AOA, MOA, in terms of giving guidance how to run the operations of a company, how to run a partnership firm. It is your responsibility to bring to their knowledge saying that, look, any of the offenses conducted by an artificial person, the person who's along with the artificial person who's into the day-to-day affairs shall be held equally responsible. So please keep in mind, any mistake goes, you shall be held responsible. That is the reason a vigilance mechanism, an audit to be conducted by an independent party to ensure the protect of that particular company. Imagine the nightmare. For a span of 6 months, say Mr. X has been appointed as a director for some purpose. After 6 months, the person has exited out of the director without knowledge of that director. Something went wrong in that span of 6 months. When a notice is issued along with the company, that director in charge in that span of 6 months shall also be held responsible. If the company doesn't take care of that notice, any imprisonment, any offense, any punishment on the company equally be held on that particular director in charge. This is the serious repercussions of a notice issued. So friends, this is what we need to understand from notice of section 74. Moving on, general provisions relating to determination of tax. Now, this gives a guidance how the taxes will be determined, how by issuing the notice, by issuing a show cause notice, by concluding an order, what all aspects the officer has to keep in mind. First is to start with period of stay. What do you mean by stay? First slide, if you remember, there is audit memo. Audit memo converts as a show cause notice. Show cause notice gets converted as an order. Order gets it goes for adjudication. From adjudication tribunal, from tribunal high court to Supreme Court. This is the way I travel in the process of my adjudication. Now there is a process where a show cause notice, the moment it is issued, before it gets converted as an order, or once an order is concluded, before an action is taken by the officer, a stay is granted. Now I'll come to this term called stay. Now, people who are not having exposure in indirect taxation, definitely 3 years of your articleship, you may not have experience in taxation. Could it be income tax matters or could it be indirect tax matters? This is something which you need to understand once you get qualified, how these no, judicial principles are taken care of. Where service of a notice or issuance of an order, service of a notice, issuance of an order is stay. So how does it happen? You would have heard something called writ petition. Article 229 talks about writ petition, Constitution of India. When we look into this writ petition, there are four kind of writ petitions. Generally, the person who is aggrieved, the person who has suffered, the person who is going to get have a painful act, that person can seek a recourse from a court of law, can seek a recourse from a court of law. Now, how does it happen? When an order is given, that particular order can be stayed by like adjudication. Adjudication is the stage, order is given. Tribunal can stay the order. High Court can stay the order. Supreme Court can stay order. Now, High Court, Supreme Court, by filing a writ petition. Your tribunal in the regular course of appeal mechanism. Now, this is where order comes into picture. A stage of servicing a show cause notice. Now, this is something which I draw your attention. Stage of serving of a show cause notice. Stage of serving of a show cause notice. A proper officer has issued a show cause notice. You, as a taxpayer, you are very confident that prima facie, the officer has exercised his authority where he is not supposed to exercise that particular power. Then you can knock at the door of High Court saying that, my lord, kindly give the directions to that particular proper officer to stop the proceedings under that particular show cause notice. Now, how this can happen? Say, I'm a registered person in the state of Maharashtra. I'm also having a branch in the state of Tamil Nadu. So, Tamil Nadu, there was one notice was served, which was converted into order. I have gone into a High Court for getting a stay on that particular order. Now, there is a matter in the state of Tamil Nadu, which was stayed by Tamil Nadu High Court. Now, this matter was brought into your what you call adjudication by way of a notice in the state of Maharashtra. Now, you have already got a stay in the state of Tamil Nadu. You will say to the proper officer, look, the High Court of Tamil Nadu has asked me not to pay anything. The High Court of Tamil Nadu, Honorable Judge, has given a direction to the proper officer not to invoke any provisions for recovery. Please stay on that matter. Now, the same thing, now when the direction was given, High Court of Tamil Nadu has given a direction to the officer in Tamil Nadu. It will not be applicable in the state of Maharashtra. So for me to get the stay in the state of Maharashtra, again I'll go and knock at the door of my High Court of Maharashtra. The moment I file a writ petition in the Bombay High Court, stating that, my lord, there is a petition already pending in the High Court of Tamil Nadu where there was a stay given. Kindly consider my plea and request this officer not to invoke that. That is the point in why my stay of a notice comes into picture. So friends, when I talk about a stay is nothing but a judicial process where the act of the officer, either under the show cause notice or under the order, is suspended, is put for a temporary suspension. That's called stay. Now they say, when there is a stay of a notice or an order, how? By an order of a court or by an appellate tribunal, the period of such stay shall be excluded for computing my 73(2) or 74(2), 73(10) or 74(10). What they are trying to say here? If you travel back in your time for Excel file, my annual return from there 3 years, From there, 3 months, when I was talking about issuance of a time limit for show cause notice, from annual return, maximum within a period of 3 years, I can pass an order. Prior to passing order, at least 3 months prior to that, a show cause notice to be served. When you're calculating that time limit, if at all, if there is a stay, that stay shall be kept away, means the stay given by a high court, the stay given by a tribunal, the stay given by a Supreme Court shall be considered for calculating the time limit under 73 or section 74. This is what we need to keep in mind for calculating of time limit. This is one thing which we need to understand. Next. This is a second point. This is a second slide where I was drawing your importance. I've explained this allegation of fraud, willful misstatement, suppression. Whenever a show cause notice is issued under section 74, where any appellate authority, once an order is given, my appellate authority is at next level. Please go back to my first slide to visualize. Adjudication is done by a adjudicating authority. I've explained you superintendent, assistant commissioner, deputy commissioner. Next is your joint commissioner, additional commissioner, commissioner in the hierarchy. Where appellate authority, appellate tribunal, a court, any of these three forum, they have concluded that whatever notice was issued under section 74 is not sustainable. Why is not sustainable? Why? Because of the reason that charges of fraud, willful misstatement, willful misstatement, suppression. Look at the language they have used. Creation of a charge. Like Companies Act, when you read creation of a charge, whenever I borrow money, I have to create a charge. Whenever there is a fixed assets purchased against a bank, against a loan, secured loan, I buy a fixed asset which is secured by a bank funding. I create a charge with Register of Companies. Similarly, my officer, when he is issuing a show cause notice, is creating a charge on me on the grounds of fraud, willful misstatement. So if this is not sustainable, way my proper officer has not established any of these three grounds on the person, then this particular allegation itself gets vacated. Please keep in mind. Whenever a show cause notice is issued under section 74, the officer is duty bound to establish existence of these three stages of affairs, like fraud, willful misstatement, suppression of facts. Now here, you as a student who's going to get into the shoes of a professional very sooner, please keep in mind, whenever you do your accounting job, whenever you do your consultation, whenever you do your audit function, it is important for you to read and understand the provisions of the law, read and understand the provisions of my Companies Act for preparation of books of accounts, preparation of financial statements, abstracting the data from financial statements for filing of returns. It is not that easy. The reason why you have all these things in your syllabus, as a professional, you would be the best person who can guide the registered person in terms of ensuring a proper compliance. Now coming further, this particular failure, when it is established, the proper officer who has failed to determine that this particular allegation is not sustainable, the proper officer shall determine the tax under section 73. Once my allegation under section 74 is vacated, by default, the show cause notice gets converted into a notice under 73. Please understand, the moment when it's converted under 73, the time limit of 5 years reduced to 3 years. The time limit of 6 months for notice gets converted to 3 months for issuing of a show cause notice. So any show cause notice issued beyond a period of 3 years, it is said to be vacated, not issued at all. This is the importance of my general principles of determination of tax. Next, moving on. Directions to issue an order. Now, where any order is required to be issued in pursuance of a direction of appellate authority, of tribunal, or a court, such order shall be issued within a period of 2 years from the date of communication. 2 years from the date of such communication. Now, I'll draw your attention to understand why there is a direction to be given by appellate authority, tribunal, or a court. Tomorrow's session, I'm going to explain something called appeal mechanism. As per the statutory thing, order should be passed. Order should be passed within a given period of time. Every order, you can file an appeal within a given period of time. Assuming there was an order passed erroneously, order passed with defects in that particular show cause notice, and those defects were not rectified, or the appeal was rejected because of my time beyond which I have filed my appeal. Now they say when there is an appeal at the commissioner has rejected my appeal, I'll go to tribunal. Tribunal has understood that Praveen failed to file an appeal because of so and so reasons which are genuine enough. Then tribunal will remand back to whom? To the appellate authority, to commissioner. So and so commissioner, please reopen that particular assessment and pass an order. Now, once direction is given from the tribunal to the appellate authority, or a high court giving a direction to tribunal, a high court giving a direction to the appellate authority, whoever it is, in the hierarchy, the court directs to tribunal, tribunal directs to the appellate authority directs to the adjudicating authority. Now look at the hierarchy. When there is a direction given, maximum within a period of 2 years, the order has to be passed by the concerned officer. This is what we need to understand with respect to communication where order has to be passed. General principles of your judicial discipline. Any order to be passed, prior to that, an opportunity of being heard shall be granted. And when the opportunity is given, I am not in a position to attend for the personal hearing, there could be an adjournment. Now, this order can be passed in two cases where a notice want to be issued or adverse decision is contemplated. I draw your attention to section 132. Any recourse to section 132 has to be invoked prior to that or issuance of a notice. Generally, a opportunity of being heard is given. Sir, what if I am not in a position? They gave me an opportunity of being heard. What do you mean by opportunity of being heard? I'll go back to my previous slide. Opportunity of being heard. Friends who have no experience, I put it across to you here, this thing. A notice is given. Before notice gets converted as an order, the proper officer will call for a hearing. We call as PH, personal hearing. Now, this is a forum, either me as a registered person or the authorized representative of the registered person. I repeat, the person, company on whom the notice was issued, the manager or the director of the company can go and represent before the authority concerned, or instead of the company or their representative, they can represent a chartered accountant. A chartered accountant go and appear for the hearing. This is called PH, personal hearing. This is a modus operandi, or this is a mechanism where you as a authorized representative, you will read across all the submissions. My lord, these are the allegations brought on me. These are the facts to be considered. These are the documents available with me. These are the grounds of the provisions or the statutory provisions I read together. And these are the settled case laws. All put together, I represent before the authority concerned. Let me put it in my Excel for the benefit of students who wanted to get into practice. Now, opportunity of personal hearing. Generally, in this particular personal hearing, we produce the statement of facts, of allegations. We will say, dear officer or my lord, these are the allegations which they have brought. The along with for those allegations, you will provide the relied upon evidences. Means you bring those facts along with the evidences to produce before the adjudicating authority or before the proper officer. Along with these evidences, you produce the relied upon legal provisions. Whatever the GST provisions you have read, you have understood, you will present that this is my understanding of those legal provisions. Also, settled judgments or references to advanced rulings or circulars. Now, you will also present before the officer concerned the settled High Court or Supreme Court judgment or advanced ruling or a circular. All this put together, I represent before the authority concerned. This is called opportunity of being heard. Means whatever I want to say, I speak out in front of the officer. I present my facts that is recorded before the order is issued. Let me come back to my presentation. Now, once an opportunity of being heard is given, there is a possibility that I may not appear because of some valid grounds, like COVID, Corona. Say there is a personal hearing which was granted in the month of June. Say on 15, 16, 17, they have given 3 dates for appearing before the officer concerned. So 15, 16, 17, there is a lockdown in my area. I don't have a permit to come out of the area. One example. Second example, the officer has sent a notice saying that Mr. So-and-so registered person come for a hearing on 25th of January 2021. They have given only one date. 25th, my authorized representative is out of station. My legal advocate or my chartered accountant who is supposed to deal with this case, he went out of station on a particular official work. So this my authorized representative is not available. So these are the reasons where adjournment, seeking a adjournment. What do you mean by adjournment? Postponement of hearing. I can plead my officer, so please consider this practical difficulty. On the specific date what you have given, my legal representative or my authorized representative is not in a position to come and appear before you. I seek for adjournment. Please keep in mind, the adjournment given at best maximum 3 times as per the law. Beyond 3 times, you cannot be given any adjournment. Next, any order which is given should be a speaking order. What do you mean by speaking order? A speaking order means a order which has all the provisions which are relied upon. He has set out all the relevant facts and the relevant decisions before he concludes a decision on the registered person. And the amount of tax, interest, penalty in the order shall not be in the excess of the amount in the notice. Now, this is one important factor you have to see. Sir, before issuing an order, a notice to be given. Any order which is given, my order cannot exceed the amount which is quantified in a notice. I repeat, any particular order should not exceed the amount which is quantified in the notice. My Shokas notice is given for tax, interest, penalty. So tax 50,000, interest 10,000, penalty of say 50,000. My order cannot enhance the tax of 50,000 to 75,000. It cannot happen. Please keep in mind, what is allegation as per Shokas notice? At best, that can be concluded in my order. I repeat, my demand of tax, interest, penalty cannot exceed the amount which is available in the order. This is what we need to keep in mind. Next, going on further. Modification of interest and penalty. There could be a possibility in the process of adjudication. In the process of adjudication, there could be a possibility when I argue appellate authority or a tribunal. That means commissioner or a tribunal or a high court or Supreme Court modifies the amount of tax Three people. Who are those? Appellate authority, that is your commissioner, tribunal, or a court. What they're doing? They're modifying. Can they enhance? Definitely they cannot enhance. Modification, they're trying to reduce the impact. They can modify the amount of tax determined by the proper officer. Then the amount of interest and penalty shall stand modified. The moment my tax is altered, my amount of interest and penalty also stands altered. Like in the previous example, 50,000 is my tax, 10,000 is my interest. If 50,000 tax reduced to say 25,000, my interest also proportionally gets reduced. My penalty also proportionally gets reduced. Shall stand modified accordingly, taking into account of so modified. Order served with modification in tax dispute or demand shall vacate the demand of interest and penalty. Like whatever reduction is there, that reduction is passed on by virtue of my interest and penalty also. Now, applicability of interest. Now, this is one fantastic provision where even if the proper officer is ignorant, proper officer blindly passes an order forgetting the demand for interest. This provision says interest on the tax short paid or not paid is payable whether or not the order speaks on its own. This is one provision to protect the interest of revenue. So interest is something compensating in nature to the government. If there is a erroneous order passed, officer forgot to speak on interest, then this provision says, even though order doesn't say the moment there is a tax payable, along with the tax, interest is automatically payable. This is what it says. Next, adjudication proceedings shall be deemed to be concluded if the order is not issued within 3 years as per section 7310 or within 5 years as per section 7410. They say show cause notice was issued. After show cause notice, order has to be served. The officer forgot, slipped off. Having issued a show cause notice, this gentleman has forgotten to convert it as an order. Now, the moment you don't issue an order 3 years under 73, 5 years under section 74, you've forgotten to issue an order, the proceedings is deemed to be concluded. That is what they say. Fantastic provision. Like officer cannot be expected to ignorant or sleeping on any of the tax matters concerned. Next, this provision says, look, there could be a possibility my department is filing an appeal. Department is filing an appeal where there's a decision which is prejudicial, which is going to jeopardize, which is going to dilute, which is going to weaken the arguments of the department, weaken the recovery mechanism. Now that is the point where departments goes for a appeal. So whenever there is an appeal filed for the department, a issue on which appeal has been filed with the appellate authority, tribunal, or a high court, where the particular concerned authority has given a decision which is on a matter which is prejudicial, then that particular decision of appellate authority, tribunal, or high court, which is pending. Now, how do I file an appeal? For commissioner, the appeal will be filed with tribunal. A decision of tribunal, appeal will be filed with a high court. A decision of high court, my appeal will be filed with Supreme Court. This provision says the period for that particular appeal, which has to be heard, shall be excluded for the purpose of issuing a show cause notice, issuing an order under section 7310 or section 7410. I repeat. Whenever a department matter was appealed by the department, then my issuance of a show cause notice, my issuance of order shall be excluding for the calculation of dates, my appeal period shall be excluded. Like what we have discussed in the first point, section 75 subsection 1, stay. I have explained you the provisions of stay. All that period which is vacated, the same way when department itself has gone for an appeal, that period shall be vacated. Next, self-assessed tax or interest remaining unpaid, where amount of self-assessed tax within which is to be paid in accordance with the return under 39, which is not paid wholly or partly, amount of interest on such tax unpaid, same shall be recovered under provisions of 79. This is a general provision what to say. If the assessee has defaulted in filing a return, defaulted in payment of taxes, a recovery provisions under section 79, they're giving a mechanism how the recovery of tax can be done. This is very, very serious provisions. When you come to that section 79, you will understand how to what extent the government offices can travel for recovering of the taxes not paid. Now, this provision says, look, a penalty, you can penalize a person for once, you cannot recover, penalize for twice. You have punished the person, like e-waybill concept. When e-waybill, my interception happened in one particular location within the state, the vehicle cannot be stopped at one more location. Once I have paid a penalty at one location, again the same contravention cannot be demanded at another location. Next, tax collected but not paid to the government. This is one provision which is very, very dangerous provision in terms of exposure on the registered person. Let me see if there are any questions before we go further. Okay. So far, so good. No questions are posted till now. Let me come back to my remittance of tax. Any person who has collected the tax but not paid to the government. I'll give you an example. Say, example, newspaper. A simple example. There's a company called A, there is a company called B. Company A, parent company, company B is a sister company. Newspaper is purchased by company A, sold to company B as a newspaper. Simple example, don't worry. I buy a newspaper for 10 rupees. I sell the same newspaper for 10 rupees. As of now, as of today, there is no tax on newspaper. I repeat, there is no tax on sale of newspaper. Company A has failed to understand that no tax has to be collected on sale of newspaper. When company A is recovering from company B, company A raised a tax invoice and collected a tax of 18%. I repeat, company A has raised a tax invoice and collected a tax of 18% from company B. Now, this provision says, look, the moment you have collected a tax, the moment you have issued a tax, you know better that the sale of newspaper, there is no tax. I also know as a tax officer, you also know as a registered person, the newspaper is not subjected to tax. But the moment you collect an amount as tax, you are duty bound to pay that amount to government. You shall not keep that particular money with you just because it is a sale of newspaper. I know that it is not taxable. You know that it is not taxable. The moment you have collected royally by way of a tax invoice, that money has to be paid to the government. That is what they say. Now, this provision says where money was collected, where money is required to be paid, which has not been so paid. How the money was collected, which has to be paid but not paid. Then the proper officer on the person who has to pay, he can issue a show cause notice. For what? He wants to issue a show cause notice to pay that particular amount with a penalty equivalent to the amount specified in the notice. Please understand. I'll give you an example. There is a civil contractor. A classic case, most of you, once you get qualified, you'll come across this particular practical scenario. Civil contractor, small time civil contractor, these are the people who doesn't have fear of complaints. These people always will be a non-complaint people. A civil contractor received a sum of rupees 10 lakhs in the month of January 2021. He has to file his return in the month of February 2021. This gentleman has given inputs to the auditor, said nil return, you file nil return. Reason, I didn't had any invoice, you file a nil return. The auditor, without knowledge of that 10 lakhs, he filed a nil return for January, February, March. After March is over, the officer, the particular chartered accountant, he was looking through the Form 26 ES, TDS credits. He noticed that a sum of rupees 10 lakhs has come in the month of January. A sum of rupees 10 lakhs has come in the month of January, on which tax to be paid but not paid. Now, that particular tax, the moment you receive money, you're supposed to pay tax. Now, look at the fate of this gentleman. The officer is saying that, look, I'm going to issue a show cause notice. You please justify how, why should not you pay the tax to the government along with the penalty equivalent to the amount specified in the notice. He says, look, you are liable to pay a tax. In addition to that tax, I'm going to issue you something called show cause notice. For what? Along with the tax, why a penalty should not be imposed under the provisions of this law. On 10 lakhs, 18% assuming be the rate of tax. I repeat, on 10 lakhs, 18% be the rate of tax. How much is my tax? 1,80,000. How much is the penalty? 1,80,000. 1,80,000 is the tax, 1,80,000 is the penalty. Put together 3.6 lakhs. On 10 lakhs, assuming I have a profit margin of 10%. On 10 lakhs, assuming I have a profit margin of 10%. How much is that? 1 lakh is my profit margin. Look at the fate. The provision says a penalty equivalent to the tax, means 18% is my penalty. Do I have a profit margin or negative margin? This is what we need to educate ourselves. We also need to educate to the assessee, the registered person, for a better compliance. So this provision section 76 says, whenever you have received money where you have not paid the tax, that money along with the penalty equivalent to the tax shall be recovered from you. Now, this proper officer, after considering the representation what was given, he shall determine the net amount due from that particular person and he will pass an order. The person referred to this subsection 1 shall, in addition to the amount, be liable to pay interest at the rate of 18%, which is there under section 50. So this person shall be also liable to pay penalty along with the tax and penalty which is payable under subsection 1. Now, before passing an order, giving an opportunity of being heard will be given, and the proper officer within a period of 1 year from the date of notice, he has to pass an order. Look at the beauty. My section 73, section 74 is different. My section 76, from the date of show cause notice, 1 year there is a time limit where the officer can pass an order. So 73 has given like you have to pass an order from the date of your show cause notice, minimum 3 months, 6 months. Here, from the date of your notice, within a maximum 1 year, I have to pass an order. Now, this is one important aspect. This is one important aspect where the money which was received by the assessee, if not paid within the due date, then officer can issue a notice under 76 to recover a penalty equivalent to the tax amount. Now, this is a regular process. Whatever amount the assessee has paid, that will be appropriated towards the tax, then later towards the other amount of interest and penalty. Next, they say, assuming if the person has paid excess amount, the excess amount will be entitled for refund of tax. Now, this is one important aspect. See, the example of newspaper, what I was talking to you. A has collected tax from B, and government says, look, I know that newspaper is not taxable. You have collected that money of tax. That money I have to pay back to government. Now I have filed a refund application, but I have paid the tax. After paying the tax, I sought for a refund. Government says when there is a money collected which is not to be collected, I repeat, money collected on a newspaper which is not to be collected, that particular money even government cannot held as a tax. So what will happen? That money will be credited to a fund called Investor Education Fund under Section 54. So this money which was collected will be credited to a fund under Section 54. Instead of giving that money back to Mr. A or entity A, it will be transferred to Investor Education Protection Fund for the simple reason because it is not to be collected as tax. Constitution, section Article 265, any money to be collected, there should be an authority of Constitution of India. If there is no constitutional authority, that money which cannot be collected as a tax shall be transferred to a fund under Section 54. Sir, what if it is a proper money which is leviable to tax? Instead of transferring to that fund, they will be giving to that person where incidence of tax has been established. This is something we need to keep in mind under Section 77. Friends, we'll come to the next aspect called Section 77. Section 77 is one important aspect. I draw to, I'll come to my Excel file to make you understand. Very, very important for your examination and also practical life. Taxes wrongly collected and paid. Now, scenario 1, scenario 2. IGST wrongly collected instead of CGST and SGST. Similarly, wrongly collected instead of IGST. Now, this is a practical scenario most of us would have come across. I'll give a classic example of my immovable property. Now, service provider and property and say recipient. Now, in relation to immovable property, service provider is in say Haryana, property is in Haryana, recipient of service is from Tamil Nadu. Now, erroneously, IGST has been charged. How? This service provider has forgot to read the provisions of Section 12, subsection 3, where this is of IGST Act. My Section 12, subsection 3 of IGST Act says, in relation to immovable property, the property where it is located, that shall be the place of supply. My service provider erroneously felt place of supply is Tamil Nadu and he charged IGST. So he has paid, he charged IGST and he also paid IGST wrongly collected and he has paid IGST. Actually, CGST, SGST of Haryana should have been paid. Similarly, in another situation, this entity has charged CGST and SGST instead of collecting of IGST. Example of intermediate supply. Say there is a commission agent. My provisions of Section 12 and Section 13. My provisions of Section 12, when I read, it says, in relation to a commission agent, place of supply shall be the place where agent is registered. Now, I'll take the same example. Let me put the headings here. Service provider is in Andhra Pradesh. Recipient of service is in Germany. And say it is not property, it is an intermediary service. Now, In case of intermediary service, my place of supply, as per GST law shall be place where this particular service provider is located. Now, erroneously, this gentleman has charged IGST instead of CGST and SGST of AP. This is my scenario 2. So friends, my section 77 says, in case if there is a wrong payment of tax, section 77 comes into rescue for that particular wrong remittance of tax. Now, let me come back to my presentation. Friends, we have touched 9 o'clock. I'll stop my discussion at this provision called section 77. Tomorrow morning, we have our further discussion. I'll continue with my demand and recovery. Then we will start with the appeal mechanism under GST law. So as of now, I'll start my discussion and let us continue our discussion tomorrow morning. Till then, see you all.